it, guys? It's been a long time. I've been sick. I'm getting better. Now all good. So what we have covered in the trade setups, back to volume profile, easy ways of trading. So what we've covered so far, we've covered an accumulation, prices accumulation, prices breaks down, or prices accumulating, price breaks up. So we take our volume indicator, we look for the volume profile at this particular range. So we come to discover that the volume, the point of highest volume within our accumulation zone, that will be our point of interest. Right? Usually that's where our point of control is found. So basically this is where we are interested in trading. Right? So when price returns, first touch, we enter into a sell in the image which we've just drawn. If it is with the lower image, this one, when it comes back, the first touch, we enter into a buy. That's how it's done. It's quite simple. As we've said, volume profile is ways of trading. So and then after this one, we went in and we looked at a trend. So the market is moving in a downtrend, right? So we put our volume profile. So we'll notice that throughout the trend there are places of peaks. So as long as an area hasn't been tested, we can trade it. So when price returns there, we can enter a trade, it will go down, we expect it to go up again, enter a trade, it goes down, it goes up, enter a trade, goes down, enter a trade, etc, etc. That's how that's what we expect to happen. However, if an area has been tested, let's say for instance this one over here, so you see that it broke here, it went back, tested, so hence there won't be a trade, because we do not trade retests. We only trade for the first time, first area, first test. To check out more about these two setups, please go check out the videos. Today we're looking at the last setup when we're using volume profile. Now I can remove this thing. Okay, we'll just ignore this blue line. Let me just change color such that we ignore the blue line perfectly. Okay, it's gone. So now we want to deal with rejections. So sometimes we notice that the price is in an uptrend and then suddenly it just shoots down, giving us a rejection area. Or sometimes we're in an accumulation and then we've got a break which leads us up, but then price quickly shoots down, right? So these are some examples. Sometimes some people call these things false breaks. So these are examples of market rejection, right? These are examples of market rejection, such that we have a sharp spike like that, whether it's up or down. We don't care how the chart looks like, but we're only looking for this sharp spike, a quick reversal. Most of the time it is there is usually an engulfing candle, or in a higher time frame there is an engulfing candle. Some of the time it's just a complete rejection of a certain price touches a certain value, and then from then onwards it just drops or it just goes high. So this is how we do it. So there are two types of rejections. There's this one where we're rejecting higher values, and this one where we're rejecting lower values. So just like before, what we do is we set up our volume profile in for our rejection zone, and then we want the point of highest volumes within our rejection, right? Just like all the others, when price returns, touches that, it drops, we enter into a trade. So we want the area where price rejected, and we get our volume profile, that area with the highest volumes. When price returns back, touches that we enter into a trade. We don't need any more confirmations. Once that happens, that is our trade setup, and we're in the trade. I hope you're enjoying these videos. So if you are and you're learning something, you're learning how to trade, please hit the subscribe button and like these videos, and even share with your friends. Criticize them, do everything which you can do. I hope you're enjoying. Cheers.